everyone, welcome to our Q&A Cafe for Business One today. Today our topic is how do I run and decipher the cash flow report in Business One. Just letting you know we are recording this session, so if you have any questions, please write them in the questions box or the chat box, and we'll get to them after the presentation portion of this session. Our next session for Business One is Thursday, May 14th. Please register for it. You'll get an email with the registration information 2 days from now. And it's for, what is it called? B1, establishing partial automation in goods receipt PO to more accurately accrue expense. That is a mouthful, but I'm sure it's very informative for everyone using Business One. So without further ado, I'll send it over to Alex and he'll start his presentation.
Great, thank you so much. Okay, welcome everybody. As Kayla said, please, as we go through this, if you have questions that come up, please just type them into the question panel or the chat panel. I'll keep an eye out for those. And if your question gets answered as we go along, that's also fine. We can just come back and readdress it. But just so you don't forget, feel free to ask questions as we go through. So as Kayla mentioned, this next half hour or so, we're just going to have a look at the cash flow reporting and maybe looks like a fairly complicated report, but it really isn't that bad. So I just maybe wanted to demystify it. So first of all, how do you find the report? So it's under the financials, usually a couple different ways. You could also go through the reporting menu, but you can go to financial reports and then financial reports again. And then you'll see here, there's the cash flow report. So that's the one we're going to be looking at. We'll also have a look at the graphical one as well, so cash flow forecast. But they both present essentially very similar information, just in two different ways. So another way to find those reports, of course, you can just type in the word cash in the lookup menu, another shortcut. So if you were to type that in, you can see those reports. So here's our cash flow, and here's the cash flow forecast. So when I open up the cash flow, and this report has been around for quite a long time in SAP Business One, many years. The cash flow forecast, the graphic one, is a newer, probably like maybe release 9-ish or something like that. So let's talk a little bit about these parameter windows. This is the classic view, and this gives us the output in a grid format. So these parameters automatically have determined what GL accounts based on how your accounts are flagged as being cash, credit card, check accounts. So in here, you do have the ability to suppress certain accounts from showing. We'll come back and look at that in a moment. This demo environment I have doesn't have any credit cards set up. It does have some check clearing accounts, so those will be represented as well. And then the assumption is that you would be pulling in all business partner information, but you do have the ability to click on this tab and further filter this information if you just wanted to run, say, a single business partner or a group of customers or a group of vendors, or activate them based on their properties that would be set up at their master data level. If anybody's not sure what that means, feel free to put a question in the question panel and I could show you more on that. Most of these are sort of self-explanatory, and when you run this report, sort of the defaulted recommendations kind of come on like this. I'll come back and explore these in a moment when we run this report a few times. But what's probably going to be most important to you is really just setting your forecasted date. So how far out into the future do you want to go? So for example, I could set this report to just maybe look as far as like July 1st if I just want to look at the next couple of months. And then what is the time interval that I want to look at? And typically weekly is a fairly reasonable one to look at. You may want to run a shorter time frame and look at this daily potentially if you have a lot of volume of cash receipts and cash disbursements going through your system. In my system, you're going to see there's not a lot of data, so I'm just going to look at this monthly. And then we're going to come back to projected postings in a few minutes. So let's just run this the way it is now and have a look at what's the output, and I'll help explain, help you understand what's going on in this report. So when it comes up, it's fully collapsed. You could do the expand all, or you could expand each triangle one at a time. And I'm going to just expand the opening balance and just explain a little bit about what's going on here. So when we get to the opening balance, what it's showing here is everything up until this date of today's date, April 30th, what is essentially eligible in cash based on the due dates of documents and the actual position of your cash accounts. So for example, if I expand on this triangle here, I'm going to see the list of all my cash accounts and what my balances are. So this is a real GL balance. I could drill down on this GL account and take you into the GL screen. And this is our current as of the moment balance because I'm running that as of this date. So essentially, this is your cash position from right now with all of those accounts accumulated together. In my case, not a great position. We're at negative 2.5 million. That's fine. That's my demo environment. Hopefully you're seeing something on the positive side in yours. And then if you start expanding on these other subledger security levels, so what's rolling up into checks are those other check clearing accounts that I mentioned. So in addition to my 2.5 million in cash, you can see there are about a bunch of inputs that have not been cleared through my system. So that's 1.8 million in those accounts. And so that's actually going to reduce, well, make this a less reduced number of 629. And then if we continue on to our actual subledgers of customers and customer liabilities and vendor liabilities, customer liable to you, but assets in our case, you can see that at a customer by customer level, so this is giving me the specific customer account, this is what's outstanding and essentially due as of this date. So if you are running in your system as I'm showing this to you, I suspect you're not going to see something as significant as this, 8.7 million, because we put a lot of historical transactions through this demo environment and then never bothered to clear those invoices. So that's why I have such a large balance here. But that, of course, does, and then what you're seeing is a rolling balance here. So keep that in mind. So these numbers here, this 1.8 is drawing down on the 622. So that gets us to essentially a positive cash position of 8.7 million, assuming that this afternoon, all of these customers were to pay these overdue invoices, which is what the system is assuming should happen, right? And then the same thing holds on the vendor liability side. So my vendors, I have $9.2 million worth of outstanding payables that are sitting in my system. And each of these, and you have your drill down arrow, so feel free to use them. If I launch that, you're going to see my business partner master data record, and you could get down to the specific account balance from here and look at all of the outstanding documents that are making up that balance in the system. So you can see these go back to 2006, 2007. So same situation, we put all sorts of test transactions through this system and never actually pay them. So your system should look very different, but you should essentially see anything that is due as of the moment that you've run this report reflected in there. And so that's also going to be an impact on your cash position, or at least your cash assumed forecast. So that's how it makes up the opening balance. So if I were to fully collapse that, where that leaves me is 476,000 in the hole. And then because I didn't have any payables in my system that were actually due in the future, just before this demo, I did go in and I put in a payable so that you could see something actually forecasted in the future. So in this case, you can see June 1st, we have an invoice. I could actually drill down on that specific document. So if you're running this in your system, you're likely going to see a much longer list of all of your outstanding payables, all of your outstanding receivables, and they should be future aged out based on these buckets that you've created based on your parameters of your report. So in this case, there's my $25,000 invoice plus tax, which is due on June 1st. And because I'm running this weekly, it's showing up in my sort of week of June 3rd is when it's expecting to clear. And that's going to put me further in the hole by another $503,000. So just to reflect this a little bit more in a more fulsome way, you could also turn off and on some parameters here. I don't believe this forecast is going to do anything right now, but I will. I'll put in a document to reflect that in a moment. If you do want to turn off your debts to vendors, customer liabilities, that of course does impact your cash flow report significantly. So that just removes all of those subledgers. You could do the same thing with your cash. So you've got a lot of flexibility here to do some scenario analysis by just turning things off and on at the subledger level. All right, let's do something in the system to impact this report. So I'm going to go into my sales and let's just drop in an invoice in the system. And I created one earlier to just save us some time that I then went and canceled. So I'm just gonna cheat and copy this. Let's put that in the wrong fields. So Maxi Tech. So keep in mind that your due dates are what's important to your cash forecasting report. So if we book an invoice for today, that's with terms of net 30, the system's doing this is going to be due on June 1st. So I'm going to add this document to the system. So if we go back and just double check this, we now see that we have a journal booked in the system, and we have a liability now set up and potential revenue booked in the system. But of course, the cash isn't realized yet because this is an uncollected document. So if we go back to our cash flow report and run this again, we're now going to see that on that week of June 3rd, so that happens to be the same week that payable that I'd set up is, but now we have a customer liability. So there's $1 million input expected on that date. So now we're looking at bringing ourselves into a positive cash flow position of 523,000. So a very simple example that you can do to just see that every single time you do a transaction, that's going to impact your forecasting ability on this report. Now, let's talk a little bit about potential sales and potential expenses. They both work the same way. For our example, we'll just do a purchasing document. So I'm going to go into the purchase orders, and let's do the same thing here. We're just going to duplicate this document. And maybe we'll do this one a little bit less. So let's just do 500,000, still a great big expense. And I'm going to set this out for, let's say 0515. So keep in mind that's our delivery document date. Invoicing date is going to be determined by the system. So I'm going to add this document. So unlike our AR invoice, which created a financial impact immediately to the system, this one does not. This is hypothetical, right? So that purchase order is real, but it hasn't been executed. It could, in theory, be canceled in the system. So if I were to run this report again, we're not seeing that 500,000. There's a couple of things that have to happen. So one of them is you have to activate the vendor forecast, and that now brings in any purchase orders. And the customer forecast works exactly the same way with sales orders. So if you do have outstanding sales orders in the system and you want them to be reflected in your cash flow, you can do that as well. So now this puts us in a position where, okay, now we have a cash flow issue potentially on the week of 0617. So this particular purchase order, you remember it was dated 0515. The system knows that the terms associated with that particular vendor are net 30. So it's assuming that an invoice is going to come in and be due on approximately 30 days after the delivery of that of those services. And so that's kind of how it's forecasting this particular item. So if you were to do a sales order in the system, it would work in the exact same way. Now, one other thing I'll mention, if that checkbox doesn't activate your purchase orders, you may want to come back here and just double check your marketing documents. So on this parameter here, make sure that purchase orders, and you can see all of your other documents as well, these may not be turned on by default. So this also does need to be activated in order for that purchase order to be reflected in that report. So do keep that in mind if you're not seeing your sales orders or purchase orders. So one other thing that we'll look at is the include projected postings. So this report does have another nice feature where we can actually create items that are difficult to potentially enter into the system because they don't necessarily relate to a subledger event like a sales order or a purchase order. Maybe it's just something that you understand internally. So we could do something like on July 1st, maybe we understand that there's going to be a loan proceed coming into the organization. And so maybe that's for 750,000. So make sure you pay attention. Is this an incoming or is this an outgoing event? And then what security level do you want it to be set at? So you saw those security levels available to you in the report. You could indicate that this had to do with one of your subledgers, or in this case, because it's a loan proceed, I'm just going to relate it to my cash account. That's fine. And I'm going to click OK. And do make sure that your data range, so I'm just running this report to barely include these. So it's coming into my very last bucket that I've indicated that now I'm expecting another $750,000 of cash in. So now my cash flow is looking much more positive, but in this particular situation, it's like, okay, maybe I need to delay this PO, or maybe I need to look at getting those loan proceeds in a little bit earlier in order to stay in a positive cash position. So that's the mechanics of running the cash flow, I guess what we call the cash flow classic report. I keep glancing over to the questions and chat. I don't see anything coming up yet. So just a reminder, if you have any questions about what you're seeing, feel free to just drop them in the panel as you think of them. In the meantime, I'm going to move over to the cash flow graphical report. So if we look at the cash flow forecast graphical version, as mentioned, if you're using a newer release of B1, then this report may be available to you. So this report has much more collapsed parameter screens, but the data works in a very similar way. So you can see in this report that we have that same data that's been represented. So there's our, instead of it being aged in the grid, it's just telling us the difference between current, which is everything in the opening balance. So there's that 2.5 million. You'll recall that our cash is in a terrible position to start off with. We do have a whole bunch of outstanding invoices. We have a bunch of incoming deposits or checks to clear. And then we've got a bunch of incoming invoices that we're expecting. And then on the incoming column, we're seeing those events that we just created. So there's our $1 million AR invoice. There's our $27,000 AP invoice that I had put in prior to us starting this. What we're not seeing right now is that purchase order, and we'll talk about that in a moment. So in this particular situation, what we're seeing on our graph is that we do have a cash flow input at this point. And then this yellow bar sort of represents that same cash flow position. So that's that same number that you saw on the grid as our cash balance. And if we hover over the blue bar, then we're seeing, well, what are the specific events that's attributing to this? So you can see that there's an outgoing amount of 27,000. There's an incoming amount of 1 million. So that's a net effect of 972. So that's great. That brings us into a positive cash flow position. And then just that little sliver you're seeing here is a representation of that 27,000. So it does tell you here that our outgoing amount is in green, our incoming amounts are in blue, and you can hover over that. So what's nice about this report is you can also click on this, and then you can see specifically what documents are building up that bar of the graph. So now I have the ability to see this. In your system, this would probably be a very long list if you have a lot of outstanding invoices and purchase AP invoices and AR invoices booked into the future. And then from there, you can use the drill down to drill down into these specific documents if you need to confirm that everything is in order. So I'm going to cancel this little panel, and let's look at the configuration window here. So you do have a couple of options. You have the ability to turn on those same forecasting. We'll talk about that in a moment. So similar to the other one, do you want the cash to be reflected? Do you want your opening balances to be reflected? You also have the ability to bring in some other documents. So if you do have recurring postings set up in your system, recurring transactions, if you have blanket agreements, journal vouchers are already included by default. So journal vouchers may be unposted in the system, but they could still be reflected in your cash should you choose. And you could also have draft documents. So for example, if you are using payables draft documents, like for recurring rent payments and things like that, and you have them saved as draft, you could activate this and have those documents also reflected in your report, and that's quite useful. Now, as far as our expense and our sales forecast, those correlate to a certainty level. So the idea being that right now we have this certainty level set somewhere between high and low, meaning that we don't know for sure that those sales orders are going to come to fruition, or that those purchase orders potentially will come to fruition. Maybe you'll decide to cancel that purchase. So if you expand this bar all the way to the low, now it is reaching into the system, and it is going to take into consideration those purchase orders and those sales orders as well. So now we have a potentially any purchase orders or sales orders in the system will also be reflected on our graph. So you can now see that our slim amount of I believe it was 27,000 AP, yeah, 27,062 has now been increased to 57,027 because of that purchase order that we just created in the system, and that's now also being reflected. Something else that's quite useful is this slider bar here is reflecting sort of the window that this graph is looking into. So we can see that most of the activity, if you were to sort of back off from this graph, is happening right there. So if we were to grab this panel and just slide it over, that's going to collapse our timeline and potentially give us a lot more useful information. So now what we're seeing is this particular event is actually happening in different weeks. It may have been happening in the same fiscal period, but we know that this expected incoming AR invoice is happening in week 22, and this future payable or purchase order is happening in week 24. So that's probably good news for us, because now we see that our cash flow is actually fairly stable, is lining up okay there. So keep that in mind, the sliders, to help you kind of dial in and see a more collapsed view, and you could go all the way down, you know, potentially to the day level if that's. So we can see what exactly is happening on every day. Once again, my demo environment doesn't have a lot of future dated documents, so it's not very interesting. But what you should be seeing in your system is a lot of ups and downs for your incoming, expected outgoing, and then where that net is going to kind of take you through the course of time. So feel free to run both of those reports. You should get the same numbers here. The only difference is really what's being reflected graphically. And depending on whether this is something you want to see visually, or maybe it's something you want to export out into an Excel spreadsheet, you may have a different purpose for each one of those.
Yeah, so that's everything. Just a reminder, we have these every second week for Business One, so please register. We have a meeting today to schedule out the rest of May and June. So you'll see more in there, but right now we have that one on Thursday, May 14th. So please register for that either on our resources page, on our website, or through the email that you'll get with the recording of this webinar about 2 days from now. So that's it, and have a safe and happy, what is today? Thursday.
Yeah, thanks everybody. Yep, stay safe and we'll talk soon.
Bye.
Bye-bye.